Greetings all, Ben here from East West, taking a look at uranium again this week. And I think the question this week is, when we look at these trends that we've had in 2023, I think the question is, did they just finish? Are they now at their conclusion? All trends do end, and just because a trend ends, rhyming here like a poet, just because a trend ends doesn't necessarily mean it's that the market's going to collapse. But maybe we just need to start to think about the implications of the market not going anywhere for a while. So, look, let's just jump in and see what we can see. So I'll do a couple of names this week, hopefully not as long as last week. But let's just look at CCJ to start with, because obviously that is the one that's showing the most signs. Okay, so just looking at this on a weekly. So we know that this has been noted before, through 2023, we've had a trending market. Okay, and that this trend line that's been pointed out a lot of times has held the market very, very well. But now, of course, this is the first time we get a close below that trend line. So, is that by itself enough to tell us that the trend is over? And what does it mean next? Well, it's kind of like a yes with an if, no with a but kind of thing. So I've said before that long term, you've got this trend, and then if you're a long-term player and then you still believe in everything, then maybe this is the trend line that you've got to consider. But the problem with that is, if this trend line is going to hold, look how far away we are from it. Okay, that means the market is going to have to come back a long way, and maybe even back to test this, a long way back to really test your resolve about holding this. And that's going to mean you're going to get a 50% drawdown from your peak, probably more. So that's why, yes, maybe you've got this in the background, but it could be years before this is either proven or broken. Okay, what's more relevant is this now, I think, because this is starting to show the signs that it's broken. Now, a couple of ways that I'd anticipate, just very broadly, and this isn't trying to do any predictions or anything, that this is just the way, the couple of ways that I would imagine that the market's going to unfold. So this would be my least favoured scenario, where we get a very quick price correction. Okay, maybe down to test back into the peaks of this old structure that we had through here, which is basically a big correction. Okay, which would tie in nicely to the 61.8, that sort of thing. I don't think that this is going to happen, and if it did, I would anticipate that this is, once the market, if the story's true and everything holds true, once the market gets below this 50% line into the market the market's on sale. Okay, this will be where you would expect, if there's going to be institutional money coming for it, this would be the area where they would start to really ramp up their operation, I would think. Okay, this is retail. This is retail. That's where retail pay. Okay, I don't think institutional investors paid there. Okay, that's retail paying. Institutional investors want to buy when the market's on sale down here. Okay, that remains to be seen. But I would expect that if we were going to get a straight price correction like that, that's where the institutional money would come in to support the market. That's how I would read it. The second way I'd anticipate that we can go about this would be something a bit more like price and time. Okay, that we get something like a bit more of a downtrending market, where we've got swings and peaks and the market digests through waves of optimism and pessimism about where the market's ultimately going. But this will take more time to play out. So then what you would expect is that if there is institutional money, that they'd still be targeting the same sort of areas, but that's where they'd be looking to accumulate. Okay, that the market would start to show, even though the peaks might be starting to get lower as they get down into these areas, that's probably where they're going to be looking to raise their exposures. Now, what's interesting is this is a direct fractal of what's happening at energy fuels, which is doing basically what I would consider like a time and price sort of correction, where it's taking its time to correct the rally. But even though obviously that's a bit of a different kettle of fish, it's just the general shape and the general way that I'd expect the market to go. So this slower slide down, not a capitulation, so a churn. So yeah, of course this is also possible, but I think the third scenario is probably going to be most likely, which is this one, and that would be, maybe for a lot of this year, what we're going to do is go into an extended trading range. Now, it's very early to say that's what's going to happen, but you think of the three ways trends can end. They can go into a trading range like this, which I think is probably most likely to happen. They can plummet quickly and do a complete trend reversal and trend hard the other way, which I think is less likely. Or they could just start to dribble off in a slower trend down in a price and time. This is what I think is probably more likely to happen. But I think what it means is that I'm not anticipating. I mean, I could be wrong, but I'm not anticipating this. I'm not anticipating that this trend is now going to keep just going. I mean, it could, of course, but I'm not anticipating that is what's going to happen. So I would be extremely careful now. Because this trend has been broken, I would be extremely careful about the expectation of thinking you're just going to get higher highs, higher lows. Okay, and this trend just keeps going on. Could it happen? Yeah, of course it could. But I'm just reading all this and I'm not feeling it, right? I'm sort of thinking that this is something like this is going to be more what's going to happen. That's just my gut feel, my gut read of it. And then we'll go into, I think if this happened, this would be, you'd be looking for an accumulation pattern before the market then eventually started, repeating this sort of trend and we go higher. But that might take time. So, a couple of good things have happened here that would make you think that there's a good chance of a range. And one of the things that we everyone would have noticed is because this was an important pivot, but obviously we've pretty much got a double bottom there now. I mean, we've just managed to edge our way away from this pivot point, okay? And we know up the top here, just around $50, just a little bit above, we've got pretty close to a triple top. So that, to me, I would sort of look at that now and think, okay, well, it's not an unreasonable expectation to think that we might be stuck in this trading range for the foreseeable future, okay, while the market takes its time to digest that rally. Now, if it keeps getting supported through here, and there will probably be at some stage, if it's going to be a true accumulation pattern, there will be some stage where it blips through and comes straight back in a spring-like scenario, and that would probably mean that we're on the right track in terms of accumulation. But this is all sort of what we're looking for in the future. So if this is going to play out, that's just what I'd be expecting. But it means that if you were trading this now, anytime it started getting hot up here towards 50, I'd be thinking about unloading my position and anticipating that we're going to come back. Now, this all hasn't happened. This is just what I think is going to happen here with Cameco. Okay, so that remains to be seen. But let's just whiz in here to the daily. So one thing, when this is just another warning shot, not just the trend line, but this was the last downswing, and then this downswing is now a lot bigger. Okay. So that would just suggest that, it's obvious, right? But that is just telling you that the sellers have now got momentum. Now, we haven't got any sort of pivot through here yet. I'm thinking, well, we don't know if this is going to be a pivot low yet. But what we really need now is some sort of bounce back to make a pivot high, and then we can sort of see if this is going to start trending down further. Okay, if it does, well, then it looks like we've probably got more a price and time, and I'd watch that, because if we test that trend channel from below and fail, that the idea of the trading range will start to break down. So that's kind of, coming into beware the Ides of March, as the old saying goes. I don't think it's going to be necessarily the assassination of Julius Caesar, but like the next couple of weeks, the next month is going to be pretty crucial, I think, for setting up what's going to be the likely price pattern for the rest of the year. But nonetheless, look, we've done okay here. This is basically a dragonfly doji, okay? So, we opened, we pushed down, we touched right into this pivot level, and we fought back and closed towards the high of the day. So, the sellers had a go at that level and it's been rejected, and that's a bit of a classic reversal candle. So does that mean that we can now start to work our way back up? That's the question. Well, since we made the low here on Wednesday, we've just had a little bit of step action here on the points of control for the session. So we've just, the business has just been conducted a little bit higher. It's just starting to step up just a little bit there, which is a good sign for just a bit of a stabilization. And even just, this is kind of not as perfect, but I mean, Friday, you got to sort of take it with a grain of salt. This will probably get redrawn as we go, but we're on a 1 hour, but since we sort of hit that, we're kind of just losing that trend, but maybe it's going to prove to be more like that. But it's not perfect that got broken on short term, but this is probably more important. So, we've just got a slightly higher high. So, you could make the case, and this is all very fraught with danger on an hourly, that maybe this is just going to be a little three-way before we just go and we just start to put in a little bit of an hourly trend that's just starting to lead us away from this important pivot point. So I think if we're going to establish a trading range here, that you'd want to see the market before too long just continue this little trend higher and just trend back up into probably testing into this sort of zone here, and then we wait and see. Like, if it's going to be a true trading range, then probably what we want is to get back up here, okay, and then start to reject this area again and come back down, that sort of thing. All remains to be seen. But this is kind of what I'm anticipating, and the indicators have been telling us pretty hard that we're running out of gas. I've pointed it out for a while, but I think the fundamentals are going to start to dictate that there's going to be some sort of natural floor in the price where people are going to be happy to put their hands up, and you could even argue that we're on sale now. But this holding is good, so let's just see if a range does develop there. Now, just moving over here now to URNM, and the thing about a trend breaking is that we can go into a trading range before the trend breaks. So what I'm saying is that we may not get that dramatic trend line break like we did in Cameco, something more like that definitively sets up a break of the trend. We could already be, and this is kind of doing the same thing, we could already be into a trading range that just dribbles outside the trend line. So we might come into a situation where, and this is not any prediction about time, I don't know how long or whatever it's going to take, I'm just thinking about how the market might start to respond, and we might just simply see price going sideways and moving outside of this overall more major trend line that's sort of held the market quite well through all of or for the majority of 2023. So that would be that kind of thing where we just start to bog down a bit, and we just need to then get some time behind us before we can digest all of this rally, okay? Because it can't just rally forever. It's going to have to just stop and check at some point. So this is kind of the anticipation again, that this sort of thing looks like the most likely scenario to emerge over the next couple of months. Now, I could be wrong. We could easily just do this, something like this, just continue on, and we hold the trend, and that CCJ ends up being like just a deviation below. I'm not feeling that's what's going to happen, but certainly, definitely possible. Okay, not a prediction, just that is always a possibility that we just refine the trend, we find the trend, and we just continue on. So maybe that just means some of the other miners sort of pick up the slack from CCJ. I don't know. We'll just have to wait and see. But one thing we've got to be aware of here is just this last downswing was about $6.80. This downswing's been a bit bigger, longer, stronger, not quite as much volume, but certainly that the breadth of it and the length of it is growing. Okay, and you can see that in the MACD. It's actually the MACD is still getting lower. RSI rolled over and diverged pretty nicely between these two peaks, which is just yet again another warning shot that we're out. and even the ADX is just starting to turn up, which is just confirming that this new trend that's establishing down. Well, I mean, this is only very short term, of course, but it's just starting to take a bit of a hold. So we wait and see. We're not necessarily going to just bust that trend line. We might hold it, but once again, I'm just wondering if we hold it or even just peak below it, and then, maybe for the rest of the year you're faced with something like that. That would be the anticipation. Even looking here at the physical uranium trust, and this is the Toronto one, so just keep that in mind. Not that it matters, they're all the same sort of shape, but once again, this has been a great trend, but it's got to end eventually, and maybe we're just starting to get the formation now of a trading range that's going to just take price and dribble it outside of the trend channel, and that trend is now over, and we're going to get a period of consolidation before we go on any further. Okay, because all the fundamental and structural deficits and stuff are still there, I guess, but that does. I've said this before. It doesn't necessarily mean that price is just going to go on a never-ending rally to the moon. Like, this is just trends just finish. Okay, and they can finish without any particular reason, but this just looks like it's gassed. Okay, that sort of major local divergence here. Okay, and the longer term divergence that we saw coming in here. It's just I mean, this is just the RSI. Okay, it's not anything really other than just a measure of. I mean, this is just a simple set. It's just a simple 14 period RSI, but all we're doing is just taking, all the RSI is just a measure of taking basically the average over the last 14 days. We take the average of all the up bars, the average of all the down bars, and we just turn that into an oscillator. And if there's more down bars and up bars and they're stronger, then the oscillator rolls over and goes lower. So so far we've sort of held through here this sort of 50 area, but once again we're dribbling on it. And like I said, this oscillator can move down, okay, without price actually just coming off. It just means that if we're stuck in this range, that the selling bars that we see, okay, more like this one, are just bigger than any of the buying bars, and that just drags things down because there's just more violence from the sell side when it does come, right? So that's kind of what I'm anticipating is going to happen here as well, that there's just going to be a trading range set up. I mean, let's even consider this uranium futures contract that's been treading like no one's business, right? It's been an incredible trend, but it's been steepening. Like to get better and better trends, we've had to draw steeper and steeper trend lines, and now look what's happened. It's just sort of settled here between, well, just call it $100 and $105, but we haven't seen this pronounced sideways action for quite a long time. We had it in here, okay, before we started rallying, and we saw what the price of the stocks did. So that's what I'm saying. Are we going to be in for this sort of thing before we start to establish a new trend? And to me, I think it's not unreasonable to think that's what's going to happen. All remains to be seen, but all I can do is just read the chart as it sits here on the hard right edge, look at what's happened in the very recent history, compare that to what's happening in the history a bit further back, try to put it all together, try to put a few things together to come up with some sort of scenario that I think is most likely. So, it then just becomes switching your sort of trading plans from trading a trend to trading in a sideways market like this. So this is what, now that we've got a Kumu twist here on the daily, and we're just moving below the cloud. So, and look, we've been above this cloud since April of 2023. It's been a long rip. So that's what I'm saying. The cloud now might go, and this will just be further, just a different way of looking at it. The cloud now might go flat, and price might just start oscillating either side of the cloud, because the Ichimoku system is no good if the market's not trending as it was through here. You wouldn't bother with it. But when you've got a nice strong trend, then it can just warn you. And we've seen here a couple of times we've dipped into the cloud, held, and now we've just got outside of it. So it's just one more little thing putting together with everything else that's warning me that this trend is done. Okay. And that doesn't mean that we're not going to get another trend at a later date. Okay, I'm not suggesting that it's all over and then we're going back down here. I'm not saying that. I don't think that's what's going to happen. But I am now warning, semi-officially, maybe in the next 2 weeks it'll be an official warning. But I would just say that this is now definitely putting out signs that the trend is done. I think that's the theme of this week. The signs are there that the trend is done. So just adjust your thinking around that. We wait to see if this pivot's going to hold and if we can start pushing back up. And if we do, it'll just be about, can we then interact with the top? Do we start getting some sort of accumulation pattern, or do we start getting a distribution pattern, which we don't particularly want? So let's just see. So I'll leave it there. I wanted to keep this a little bit shorter. Last week I rambled on a little bit. So that's it for this week. Let's watch our pivots. Let's just keep our heads about us, and we'll see where we sit next week. Thanks for watching. Bye for now.